Listen to me. We need to have a serious, sister-to-sister, brother-to-brother talk about your money. I want you to pause whatever you are doing, look me in the eye, and really hear what I am about to say. You have worked hard your entire life. 30, 40, 50 years of waking up early, sacrificing, packing your lunch, and saving every penny you could scrape together. Now, you are either in retirement, or you are standing right on the edge of it, looking out into the next chapter of your life. And you are terrified. Do not deny it. I know exactly what you are feeling. You are terrified of losing what you have built. You look at the stock market, you see the headlines, you hear the experts talking about volatility, and you think to yourself, Susie, I cannot afford to lose a single dime. I am going to take my money out of the stock market, I am going to put it into cash, into certificates of deposit, into long-term bonds, and I am going to play it absolutely safe. Now, I know what you are thinking. You are saying, but Susie, what about the stock market? What if the market crashes right after I retire? That is a valid question. It is called sequence of returns risk. If the market takes a massive dive in the first few years of your retirement, and you are forced to sell your stocks at a loss to pay your monthly bills, that can permanently damage your portfolio. I get it. I am not telling you to be reckless. I am not telling you to take all your money and put it into speculative tech stocks or crypto or anything crazy. Absolutely not. But the solution to market volatility is not to run away from stocks entirely. The solution is balance. The solution is creating a plan that protects your short-term needs while allowing your long-term money to grow. Think about your retirement money in buckets. You need a bucket of cash that is completely safe, completely liquid, that can cover your living expenses for the next 3 to 5 years beyond what you receive from Social Security or a pension. Why do you need that? So that if the stock market does drop, you don't have to touch your stocks. You can let your stocks sit there, breathe, and recover, because history shows us that the market always recovers if you give it time. But the rest of your money, the money you won't need for 5, 10, 15, or 20 years, that money must stay invested in growth-oriented vehicles like high-quality, dividend-paying stocks or low-cost broad market index funds. Why? Because over any 10, 20, or 30-year period, stocks have consistently outperformed inflation and fixed-income investments. You need that growth to fuel your future years. You need those dividends to help supplement your income. If you do not have that growth engine in your portfolio, you are essentially deciding to accept a lower standard of living later in life. You are deciding right now, out of fear, that 80-year-old you doesn't deserve to be financially stable. Is that what you want? Do you want to be dependent on your children? Do you want to be worrying about whether you can afford your prescription medications? No. You want to be independent. You want to be powerful. But to be powerful, you have to control your fear. Let's talk about an actionable takeaway right now, because I don't want you just listening to me and feeling emotional, I want you to take action. I want you to look at your current asset allocation. If you are sitting there with 80% or 90% of your money in cash, money market funds, or short-term treasury bills because you are afraid of the market, I want you to reevaluate. A good rule of thumb for a retirement portfolio is to have enough cash and secure income to give you peace of mind for the immediate future, but you still need a solid 30, 40, or even 50% of your portfolio in equities to combat inflation. You need to look at your investments not as a shield to hide behind, but as a tool that works for you. Another huge mistake people make when they plan too conservatively is claiming their Social Security benefits too early. This is part of that same fear-based mindset. People think, I need to get my money from the government now before it runs out, or before I die. So they claim at age 62. Let me tell you something. If you claim your Social Security at age 62 instead of waiting until your full retirement age, or better yet, age 70, you are permanently slashing your monthly benefit. If you wait until age 70, your benefit increases by approximately 8% for every year you delay past your full retirement age. Where else on earth are you going to get a guaranteed, inflation-adjusted 8% return on your money? Nowhere. When you plan conservatively out of fear, you often take Social Security early to protect your investments, but you are actually sacrificing a massive, guaranteed income stream that would protect you against longevity risk later on. If you have the health and the means to delaying Social Security is one of the most powerful anti-inflation, anti-longevity risk moves you can make. You see, true financial freedom doesn't come from avoiding all risk. True financial freedom comes from understanding risk, managing it, and standing in your own power. When you let fear dictate your financial plan, you are letting the markets control you. You are saying, I am so afraid of a temporary drop in the market that I am willing to accept a permanent drop in my lifestyle. That is a bad deal, my friends. I want you to be strong. I want you to look at your numbers clearly. Sit down with your statements. Calculate your true cost of living, accounting for inflation. Understand that your retirement could last for decades. Build your cash cushion so you can sleep at night, but do not starve your future self by keeping your investment engine turned off. You have the power to make the right choices. You have the power to build a balanced, secure, and fruitful retirement. But it starts with replacing fear with knowledge. Stop playing it so safe that you put your entire future in jeopardy. Face the numbers, find your balance, and protect your wealth for the long haul. You can do this, and you deserve to do this. Stay safe, stay strong, and stay secure.